Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 354 on December the 21st, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Lucid Group, the KraneShares CSI China Internet ETF, and Robinhood Markets, and we discuss three new trades on BlackBerry, the United States Natural Gas Fund ETF, and SoFi Technologies. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on the show. You can visit our website and click on the videos tab to watch them or visit the YouTube channel for the Weekly Option. Now, the markets finished lower for a second week in a row. The Dow Jones Industrial Average lost 987 points, closing at 42,840 points on Friday. The S&P 500 index lost 120 points, ending the week at 5,930 points. And even though we finished the week lower again for a second week, realize that we are still very much at all-time highs. So the market is still very strong. Now it's time for the topic of the week. The topic of the week is gratitude. As we near the end of the year, I'm forcing myself to write down a list of things that I'm grateful for. This has been, admittedly, a hard year. I was faced with some challenges this year that were new to me and at times made me want to give up. Of course, all of the challenges were not bad. In nearly every aspect of life, resistance is required for growth. Well, I grew a lot this year. Next week, we will talk about planning for next year, but this week is all about gratitude. There are dozens, possibly tens of dozens, of studies that show the benefits of gratitude on your health, on your brain functions, and on your relationships. My hope for each of you is that you find time to make a list of things that you are thankful for in your life right now. This might be easier for some than others, but you could do this no matter what your current situation is. The fact that you have access to a podcast means that you have access to technology. You can put that as number one on your list of things if you need something to start your list of things to be thankful for. Now, I'm choosing to end this year in gratitude. I'm thankful for each one of you taking the time to listen to the show each week. My gratitude list is longer than you can imagine, even after a challenging year. That is preparing my heart to enjoy the holidays and to look to 2025 with hope and anticipation. Grab your sheet of paper and make a list of the things that you should be that you are thankful for. Start with 5, maybe expand it to 10, or just keep writing and see what happens. All right, so that's it for the topic of the week. Let's dive into the review of last week's trades. We're going to start off with our cover call on Lucid Group, symbol L as in Lima, C as in Charlie, I as in India, D as in Delta. At the time, the stock was trading for $2.58 per share. I looked at buying stock and selling the January 3 call at 17 cents, hoping for a return of 22.87% in 5 weeks. Well, shares of Lucid Group gained 44 cents, ending the week at $3.02 per share. The call option we sold gained 16 cents, leaving us with a net profit of 28 cents if we were to close the trade out immediately. Now, with the stock above $3 per share, the position is lining up to capture profit that is more than twice the size of our immediate gain. No adjustments are needed at this point, but we do still have 4 weeks left before expiration, so you'll need to keep an eye out for the stock, making sure that the stock price doesn't move against you, and be prepared to make adjustments if needed along the way. And of course, with 4 weeks left, if someone were to close this trade out and essentially walk away with 50% of the expected profit, I totally understand that as well. Always good decisions. Taking profit is always a good decision. I just am at a point in my trading where I try my best to maximize the profit when it's there. All right, next up we have the credit spread. We looked at the KraneShares CSI China Internet ETF. symbol K as in kilo, W as in whiskey, E as in echo, B as in Bravo. At the time the stock was trading for $31.72 per share, I looked at selling the January 31/30 put spread at 38 cents. That could give us a maximum possible loss of 62 cents per spread. Well, shares of the stock lost $1.76, ending the week at $29.96 per share. That out of the money put spread that we sold is now in the money, meaning this is a loss for the week, and that sucks. Now, we could choose to turn this into an iron condor immediately. There's still 4 weeks left for this stock price to increase again. The short call spread that we would sell in an iron condor would nearly guarantee a loss if the stock were to go higher. And for that reason alone, I would lean towards being a bit patient before making an adjustment of that nature. The stock could bounce a bit and breathe life back into this trade. So I, of course, am an eternal optimist, and you're hearing that right now. Now, we sold a spread, so the maximum possible loss was known right from the start of the spread, start of the trade. So if the stock doesn't bounce a bit in like the next week or two, I would strongly move towards selling the iron condor or even closing the trade out for a smaller loss overall. Again, we have 4 weeks left in this trade, so there's plenty of time to make an adjustment if the stock doesn't bounce. And then our final trade from last week was a debit spread on Robinhood Markets, symbol H as in hotel, O as in Oscar, O as in Oscar, D as in Delta. At the time, the stock was trading for $40.20 per share. I looked at buying the January 39/40 call spread for 55 cents. That could give us a maximum gain of 45 cents, or that would have been an 81.82% return in 5 weeks. Well, shares of Robinhood fell $1.87, ending the week at $38.33 per share. The in-the-money call spread that we bought is now out of the money, and this spread has lost nearly all of its value, which means exiting the spread would simply lock in a huge loss. But we also have the benefit of time. With 4 weeks left in this trade, there's no way that this spread should have lost all its value, so I'm not willing to close it out just yet or make an adjustment. Now, if the spread has not recovered in the next week or two, we'll definitely have some decisions to make, but just make sure you have a plan for how to make an adjustment to this trade as well, or even consider closing the trade out early if the stock doesn't look like it's going to recover before expiration. So that's it for the review of last week's trades. Yesterday, December the 20th, was the expiration for all monthly options in the month of December. All trades on this week's show will use the January 17th expiration for monthly options in January. There will be additional strikes priced on Monday and likely better prices for all of the trades that are mentioned on the show today. And also, don't forget that the markets will be closed on Wednesday, December 25th in honor of Christmas, and they'll close early the day before at 1 p.m. Eastern Time on Christmas Eve, December the 24th. So let's get into the new trades. We'll start off with the cover call on BlackBerry, symbol B as in Bravo, B as in Bravo. The stock ended the week at $3.68 per share. I'm looking at buying that stock and selling the January 4 call at 15 cents, hoping for a return of 12.77% in 4 weeks. Now you enter this trade by buying stock for $3.68 per share and selling the January 4 call at 15 cents. This trade makes the most money if stock prices finish above $4 per share. The break-even price is $3.53 per share, and in real terms, the stock purchase would require $368, and you'll collect $15 for selling the option. Next up, we have the credit spread on the United States Natural Gas Fund ETF, symbol U as in uniform, N as in November, G as in golf. The stock ended the week at $15.87 per share. I'm looking at selling the January 15/14 put spread at 33 cents. That could give me a maximum possible loss of 67 cents per spread. Then you enter this trade by selling the January 15 put at 75 cents and concurrently buying the January 14 put for 42 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $15 per share. The break-even price is $14.67 per share, and in real terms, you'll collect $33 per spread that you sell and have $67 at risk. And then our final trade on the week is going to be a debit spread. We're looking at SoFi Technologies, symbol S as in Sierra, O as in Oscar, F as in Foxtrot, I as in India. The stock ended the week at $15.35 per share. I'm looking at buying the January 14-15 call spread for 67 cents. That could give us a maximum gain of 33 cents, or that's a 49.25% return in 4 weeks. Now you enter this trade by buying the January 14 call for $2.01 and concurrently selling the January 15 call at $1.34. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $15 per share. The break-even price on this trade is $14.67 per share. In real terms, you'll pay $67 to enter this trade, and your maximum gain is $33 per spread. So that's it for this week's show. I know I'm posting it a bit late for those of you who normally look for it to come out a couple hours earlier. Just life and the holidays got in the way a bit this morning, but it is all well. I'm posting this now. Hope you guys have a wonderful weekend, a Merry Christmas, Happy Holidays, whatever it is you decide to celebrate. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.